Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Hello guys, good afternoon. Today is Wednesday, July 21st. I'm going to be talking about today's trades, today's price action, and basically going through some of the panels that were developed today. And yeah, let's just jump right into it. First thing that I encounter, keep in mind that I got up at 7 a.m. This is what I find. I see that price was basically pushing higher since basically yesterday, as we reacted to a 1 hour POI. This is the high of the order block and this is the low of the order block. So you can see that's basically since that point we were basically pushing higher, and we had a push right here, which basically changed again to the bullish side. So basically my first intention was to look for buys, but at the same time, as you can see here, we basically had a 1 hour POI. Let me actually just put everything in here, hide it, and that's the 1 hour POI, which I talked about on the Telegram and said that, well, this is a substructure POI. As you can see, that order block does break some structure, but I consider that substructure, as our confirmed high and confirmed lows are basically not broken by this order block, but it breaks substructure. So basically I didn't give it that much importance, but I did think that, well, price could easily react from there, so I should just basically pay attention to it and see what happens. So start to analyze price. I saw that we basically took liquidity. When price creates liquidity, as an example, this side above, in this case above, it's usually for price to take that liquidity and later fall, right? That's what liquidity is there for, right? Sorry, I had to make a small pause. So basically, when I identified that liquidity, which was basically being generated as price was basically entering into this order block, I did like the bearish scenario in this case. I basically started to analyze for both sides, of course, as you have to keep in mind both sides. And in this case, I was mostly going for the bearish, as it was where we had taken liquidity and we had a bearish order block. And on the bullish side, I was waiting for something clean to happen, such as this one, an area that had liquidity or something like that. And basically somewhat of extreme areas, not something just as an example these areas that we have here. The example price does basically react to this order block right here. This happened before it got up, but I don't think it's something that I would have taken, as this pause does cause a flip, but that's the only confluence that it has. So basically we have a flip here. Price comes back up and mitigates the extreme, then continues to push lower. My first entry when we caused this break right here was this extreme, which, as you can see, was never mitigated. And then what we have is somewhat of a range that we could consider as it's basically creating liquidity towards a higher range, or we could consider this range as a range before this break that we have here, right? So that's the way that I saw it, and basically I started to consider this as a range before the break. And we even created liquidity before pushing lower, which is not that clean or anything, but it is a couple of equal highs, or, well, not equal highs, but very alike highs, and basically I was expecting price to come up and take them to then continue to push lower, and that's what basically happened. So on the buy side, I did like the liquidity that was created. So when I was taking the sell, I was a little bit hesitant to do so, as we basically were reacting to a bullish area and coming basically from a bullish major trend, to call it somehow. So yeah, I hesitated a little bit there, but I said, so we do have the confluences for the sells. We also do have the confluences to take this buy. If I would have placed the buy to 25% after seeing that liquidity, I don't think it would have been mitigated. triggered in, as I would have come for the very least at the 25, and if it barely taps the area, then it's most likely not going to mitigate me. So yeah, on the sell side, that's actually different. If it hits the area, most likely mitigated. So what do we see next? After this point, I basically just start to analyze price and see what's going on. And the first thing that I see is that we have a flip, got a break. After the flip, we do, price does come back to mitigate onto that pause. These actually did react to this range that we have here, that if we see closely, we see that basically we had a break to that, right? Basically reacted to this area, and well, I thought these were actually close, but no. So we have this liquidity right here, this one bottom, and then we have this liquidity, which is much cleaner in my opinion. And that's basically it. And this move basically took all of that liquidity and then continued to push higher. So this is a pretty good area and range on itself, that basically price later comes back and basically reacts to the whole range itself, right? So I didn't spot this until I was on this sell. I was thinking about taking this sell, as I basically thought, okay, so let's actually see where did this come from. Where did this move come from? And basically realized that, and just thought, well, this is actually a pretty good reaction to the bullish side. Keeping that in mind, we might would have been able to take this trade, but to be honest, I don't think I would have had, as we had just taken a profit, and this was a pretty risky trade in my opinion. And I think that maybe even going with the 25 in this case, we would have been missed. So what happens later is that we have a break. The continuation trade, I talked about this on the Telegram, and we have this area, and basically the extreme, right? Which the extreme in this case somewhat of a range, which is composed by these three candles, that fourth now, these three candles that we have here, right? Those are basically the three candles that basically form this range in my opinion. So that this scenario basically is considered as a continuation trade, right? So first mitigation and now the second mitigation, which is what we go for, and that would have been a take profit. So I didn't entirely like this. I thought it was a pretty risky trade, as in my opinion we could be looking further for sells, as we do come from a somewhat of an important area. And as you can see, in this case I was wrong. Took a loss here that had liquidity and everything. I did analyze this and thought that I might missed out on a trade. It barely misses the 50 in this case, but as you can see, it's somewhat of a pause before the break. Price does come back into that range and then causes a reaction. But yeah, I just identified that immediately as liquidity, because as you can see, those are really like actually equal highs, right? So the price then creates a little bit of liquidity, comes back down, takes that liquidity and continues to push higher, and yeah, that point when I see this break right here, which happened pretty fast, I placed this trade. I was about to take out the sell, but I decided to keep it because I thought I had good enough confluences. But if you were watching the reaction, or the way that these three candles were basically being developed, which was literally something like this, a pretty fast move in just maybe 1 or 2 seconds, that basically moved 80% of the candle. Then this other candle probably did something like this right away. So that strength, and then that the speed of the move already shows a lot of the strength that is basically behind this whole movement, right? So at that point I kind of wanted to delete the sell, but as I said, I basically didn't. So what do we have next? We have this pause. So we have price pushing higher, we have somewhat of a price pausing or ranging basically for a little bit to then continue to push higher. Now this range does cause somewhat of a major break, right? Just caused by this. We could have identified that cause as this, but if we check the how do you call this, the premium and discount zones, this is the discount zone, and when you're trying to buy, you basically look for trades on the discount zone, and when you try to buy, and when you try to sell, you basically go for the premium zone, right? Okay, so basically basing ourselves on that basic theory of discount and premium zones, we could have discarded that area. At the same time, as you can see, this pause happens right before this break. The break of that high, sorry, that high, is basically caused by this candle, right? And as you can see, after that candle, price actually does come back to mitigate that pause, mitigates the pause, and then continues to go higher, right? So at the same time, this pause has actually been mitigated already, so it's, for me, it's just worthless. It's no longer an area for me. So I've said a couple of times that as an example, a pause, let's do it here. So we have somewhat of a pause. So we have this like that. And we start pushing higher and higher and higher. Something like that. Okay. When we have a pause right before a major break, that's a pretty good opportunity to take a risk entry here, right? Now, if we have the exact same structure, but let's say we actually don't cause a major break, say the structure, let's actually just draw it again. Let's say we have something like this, and yeah, just like that, okay? So let's say we have this small pause. Now let's just do it higher. Let's just do it somewhere around here. Let's say we have that pause, right? That for me, if it costs nothing, let's say we have something like that. If that costs nothing, then for me, it's not a risk entry. It's not as valid as the last example, right? So in this case, I would expect for something like this to happen. I would go for this second entry and not the first one, as this is a very risky entry. And then price could continue to push higher, or of course it could basically fail and continue to push lower, right? Because this is just a pause, right? As we have that pause, we also have this one, we have this one, have this one, we have this one, etc. Right? So we have so much areas that we could try and go for this one, get stopped out, and then this one stopped down, this one, the price could do just this and then continue to push lower, right? So basically, when I have a pause or range before a major break, then that's basically an entry against a pause that didn't actually cause anything. If we have a pause, then basically we could try and find an entry after the first mitigation to that pause, right? Or maybe we create liquidity above that pause or something like that that will actually make it be a stronger area on my eyes, and that will basically lead me to actually go for an entry instead of just ignoring that area or waiting for another confirmation. So where was I? Right, so I missed out on that one, right? I saw the pause and everything. I hadn't identified the major break, to be honest. I didn't like the push itself. I did talk about this bullish move that we have here, all of this. On Telegram, I said that I didn't like any of the areas to look for a buy. And basically, when I saw that this actually worked out, then I thought, well, actually, now we could actually be looking for an entry or something like that. As you can see, we have then another major break of this structure, which is basically caused by this range, somewhat of a range that we have here, a couple of candles that basically pause to then continue. I drew this. I don't remember if I actually sent a screenshot about this trade. I see what's happening, or was it on this one? It was actually on this one, yeah. I don't remember. Do I have Telegram open? Yeah, I'll check that out later though. So basically, as an example, in this one, I think I did draw it and everything, but I just didn't have the strength or the courage to take it, as we were kind of reacting to this area on the sell side, which I went for, and I basically took a loss. And it's this, as you can see, we had taken the sell here, this one. I had placed a trade here earlier, but that basically didn't come back to mitigate. But that area for me was pretty strong, and as you can see, it does cause a very short-term reaction. And I try to go for a confirmation entry onto that one, or double confirmation entry in this case on the 50%, and then basically ended up taking a loss. So I missed out on these two buys, which were very clean. This buy It's a little bit risky, not that clean as an example this one or this one, but still have a lot of sense and more when you created liquidity right before, well, not before, but just while basically mitigating onto that area. So the next that we see is the break of all of this major area, and we also break the order block, so it's pretty strong. We have a range or pause before that major break. It's not an area that I actually liked since the beginning, so I wasn't actually thinking about trading this. Then we do have we create liquidity, we push a little bit higher, we do break that high, so that does give a pretty good indication that this could be that pattern. I don't know if you remember the pattern that we had a couple of times, which was something like this, and created liquidity, mitigated the area, and then went up, right? So say that's liquidity, didn't draw it correctly. We saw this trade, I think, twice, and I made a video on it. Well, why when we had this trade, but basically something like this. This is the structure that I was kind of waiting for. But in this case, the liquidity was created inside of the order block, which is common in some cases. It's not that actually that uncommon for that to happen. But basically, I didn't have the strength either to go for this buy. To be honest, I felt like the buys were a little bit extended and price could actually go a little bit lower and maybe hit a confirmation or double confirmation entry on this spot that we have here. And to be honest, I didn't feel like trading that move, so I just didn't do it. And if I would have traded it, as the liquidity is basically basing itself on the 25%, I would have gone for the 25%, hoping that price actually mitigates the 50 and then continues to go higher, right? As if I place my trade on the 25, which is basically here, basic price has to go a little bit further for me to be mitigated, and then price could continue to basically push higher, or of course will basically go lower. But I do depend that price actually goes a little bit further down, further deeper than where my entry is placed, so I actually get triggered in, right? So as I said, I would have placed my entry on the 25, which would have meant that I would have been missed basically. I was not going to get mitigated by that small wick. So yeah, that's a shame, but still would have been nice to have the trade placed. Then we basically range a little, we caused a break, I had liquidity. I did kind of like this for a touch. If I was to trade this, my stop loss was maybe going to be basically below this low that we have here. So I would have been 40, so by adding this price would have been 45. We do have a pretty good start to that, but it just doesn't work out actually. Yeah, no, it does mitigate me, even though it doesn't actually tap it for sure. Sorry, I would have been mitigated somewhere out there, right? That's pretty much it on that. Hasn't hit target just yet, but yeah. So after basically at this point I was just watching. From 11:30 I wasn't really paying that much attention. We did have a 1 hour order block in here that I decided to check where this flip reacted to, and it actually did have a good order block. That's why this is drawn. But of course it just didn't go for it. It didn't make that much sense to actually just take an entry there, and the buys were pretty strong, so I wasn't really armed with that. So as you can see, this sell was a range before break that also had liquidity. This buy was basically a continuation trade, right? Flip, pause that caused the flip was mitigated. Then we have a little bit of a range. We break the extreme. We use that as continuation trade. That gives us another opportunity. We then push higher. We have a pause. We have a major break. Price comes back to mitigate the pause. Then we start to push higher. We have a pause, or we could call this a range, just before a major break, which price basically comes back to mitigate. Another take profit, and then we have another range or pause before a major break that basically was mitigated and gave another pretty good trade, right? So I just wanted to say that, as you can see, the how do you say this? the the simplicity that can be found within some of the patterns that I use um, usually, right? Uh, is so strong that it can give you many opportunities if you are basically if you pay attention to price, right? You gotta pay attention, you gotta see what's going on, you gotta basically analyze, you gotta identify patterns as they're happening, because if you understand them or identify them after it has actually happened, then it's not that useful. It is useful that you, as a example, come back after the market and you start to see, okay, so this worked out, this is range before a major break, that worked out, this is a pause, that didn't work out, why didn't it work out? Because we had a stronger, I don't know, counter trend or something like that. It is good to be able to identify them post market, but it is better to identify them while they're happening, as it basically gives you the opportunity to take them and we'll have a couple of profits. So today I took 2 losses. I missed out on at the very least 2 more take profits, as I took 1 take profit. As an example, I don't think I would have taken this trade if I was on this. So I don't think I would have taken both of them, right? So I either took this one or this one. So this 5R, I took exactly a 1%. On this one, well, it could have been a little bit more or just a 1%. But yeah, it is what it is. You got to learn. At the very least, we did get out on profits. This is minus 0.5, so basically got a 0.5% profit. And that's good. It could have been way better. As I said, basically, we're talking about at least a 1% extra. And if we would have gone for this, that's another 1% basically. But yeah, you learn from these things and just gotta continue to analyze price. That's it. Gotta pay a lot of attention to details. As an example, yesterday, even though I didn't trade it because I was feeling pretty unwell, the first trade that I took basically made me realize that I was not going to be able to trade that well through the day, as I was feeling sick and everything. So I decided not to trade. But I was analyzing the market as it was going, and I basically it got to a point that I think I got like 3 losses in a row. As I said, I wasn't actually trading, but I was saying, okay, so I could take a trade here, I would draw it and everything, come back and realize that that was actually a loss. And I don't know, I think it got to the point where I took 3 or 4 losses in a row, and I basically said, so today's price action is looking very weird, and it's actually not working out that well with the type of trading that I do. And as you saw yesterday's markups, if you saw yesterday's markups, you can easily see that there were actually a lot of opportunities, and I even have them here, don't I? Let's add all of this here. Yeah. And as you can see, we're talking about, of course, I would have gone for 5R, not for this order block itself. We're talking about 5R, talking 2 losses, so 3R, 8R, 13R, 18R. We're talking a loss here, 17R, plus 5, we're talking 22R. And then we got 5 more, so that's 27R. So yeah, it got to the point to me that, as an example, well, I don't really remember where I took losses. I think I had taken a trade here, as it has liquidity and everything, right, on this order block. And for me, it made sense in the moment, but I wasn't feeling that well, so I don't know, I just maybe wasn't focused enough or something like that. But as I said, it basically thought, well, price today is just basically shit. Price is ranging too much, or price is doing, I don't know, weird things. And it was, for me, after lunch, I was actually feeling pretty well after lunch, and I came back to do the markups to later send them to you. And I realized there were so many opportunities. Some of them were hard to find because, as an example, this pause, which whether we like it or not, it is the pause just before the break, right? worked out so amazingly, but for sure at the very least would have put my stop loss just above this high, right? And having that in mind, that's 6.3 pips of stop loss. And if I have to add the spreads, we're talking about somewhere around 7 pips. That's not something that I do, so that's for sure something that I would have actually missed, right? Then we have some really clean opportunities. As an example, this one, which makes a lot of sense to actually take, which is one of the losses that I basically identified, one of the trades that I basically identified. And I think this was, yeah, actually this was the one that I took, isn't it? I think so. This one, as an example, makes a lot of sense too. In these two cases, I think I was very right to take those trades, but just didn't work out, right? But if we continue to analyze, we see trades like this one, which were very clean. We're talking about a very clean, and I don't know, I don't even know how to explain it because it's just such a clean candle, which is a pause. Because what I call a pause is something like either price doesn't move at all, so it's a doji, or price does something like this, so the candle is just, just pauses, just literally a pause. That for me is a pause, right? This one. This is a pause. This is a pause. I mean, this is a pause. Price just, goes, in this case, goes higher, pauses, and then continues to go lower. That's a pause for me. So this is a very clear pause just before the break, which worked out amazingly. And this trade, as an example, it's a little bit hard to find. I do remember saying, okay, so this is a flip, right? We could identify this as a break. We could be waiting for something a little bit larger to consider as a break, because if we do consider this a break, we could also consider this small wick a high, and basically the move next to it the break, right? But basically, I did consider that as a break for a second. But as I said, if I remember correctly, I think I went for this while I was, I was not trading per se, but I was basically fake trading. I don't know if you can call that, because I wasn't even in the mood to trade with a demo account or anything like that. I was just saying, okay, so let's say this is a trade, right? And I will draw the trade and everything, and price will go right through it, right? So pretty clean opportunities to happen, and in my opinion, and in the moment for me, they were just, I don't know, price was just not working today. It was just doing dumb stuff. And then later I came back to realize that basically I was the one that was not working entirely correctly. And price actually worked out amazingly yesterday and gave out a shit ton of opportunities, which could have led to a shit ton of take profits, or basically, yeah, good price action. So that's pretty much it. Today I thought, I have to analyze every detail. Analyzing every detail, you do come to realize that, as an example, every flip and every break is not a tradable, is a tradable movement, but it depends on what you find worth to be traded, right? You can't just say, okay, so we have the confluences and everything, but it depends on, because as an example, I have a couple of examples here. This right here is a flip, but even though it was a flip, I was not considering, of course, when I have just a flip, I don't consider that as an entry, right? I'm not taking this because that's a risk entry. I go for the confirmation entries. But I wasn't even waiting for the break then to happen to go for a trade, right? Because I don't know, I just didn't think of it as an opportunity. As an example, I did think of this as an opportunity, as it did happen in a pretty strong area. And in this case, I drew it, and I think I had drawn this one too. But I still didn't consider the whole thing as a strong flip, or a flip that I would actually start to consider as a trade or something like that. I don't know if I'm explaining myself. There was actually an example somewhere here. No, here. Okay. So as an example here, we're pushing lower, right? We had flipped here. The break of this low makes this our high, and as you can see, price actually comes back later and flips again, right? And then we do range a little bit, and then we continue to push lower, and as you can see, we have a break here. I drew it as a break because I didn't consider this a flip. It is a flip technically, But I don't know, I said, it's not worth drawing it as a flip or considering it a flip because it's just such a minor reaction that basically led to nothing because it's not that it actually changed the order flow and actually broke structure later, right? It's just break, which was even minor, right? But if this break had happened somewhere else or in a more bullish context, I might would have thought of that as a pretty strong reaction and could have considered looking for a trade somewhere close, right? So, yeah, paying attention to details, you do realize that there are a lot of opportunities, and this was one of the trades that I wasn't. Sorry, this is one of the trades that I identified and could have traded, but I don't know, I just didn't have the courage. At the same time, I was kind of looking for the sells, and yeah, it could have been a way better day, but yeah, it is what it is. We got out in profits, so that's good. It could have been way better, but I'm grateful that we got out in profits, and I think it was a pretty good day overall. And tomorrow is going to be a way better day for sure. So yeah, I'll be calling back tomorrow, guys. See you soon.